Hey, this is my evening video. Thanks so much, guys, for watching my videos and retweeting them and liking the videos and giving me comments and stuff. Please keep that up. Really, really, please keep that up. All three of those things help me get more viewers and make it worthwhile my time to do this. Okay, guys. So I'm going to start with the bond market today because the bond market is driving these markets. And I am going to make a case right here, right now, that we might have found a short-term bottom in the bond market. And it's like, oh my God, no, they're going straight down. That can't be the case. Well, here's some takeaways that I'm going to do, and I'm going to put some different tools together here, and hopefully you can understand what's going on. So basically, over the past month, it has just been absolute carnage in your TLT. Okay, and I'm using TLT because it's a longer. I got longer dated price action that I can actually use. It's not really great for measuring bond activity, but because of the long chart action, I'm going to use that as my way I'm talking about bonds. Okay, so so basically, all these little gaps right here, these were gaps from the bottom of the prior day wick to the next day. Okay, so actually the gaps are actually a lot larger in many cases because we actually came off the wicks and then gap down real big the next day. And it's like, why in the heck is this thing just getting destroyed like this? You have to ask yourself, why? Well, the main reason is at this price point, okay, at these price points right here, has not been supported. On the way up, it went up so fast, we didn't have enough volume inventory come up to build out a volume profile value on the way up. So basically, we just it's almost like we had an island scenario where, we went up so fast, even though we have some price action, we didn't have enough to give supporting price action in the bond market. And that's exactly the period that in my opinion, we might have just completed. Okay, the reason I say that, okay, this is my volume profile on the yearly time frame. I'm going to enlarge this real quick here, okay, guys? And so bottom line is we came right down here. So you look back in history and you see exactly what I'm saying right there. When we broke out last time, the volume profile there was not that much volume inventory to support price. We came up to a higher level, okay, and then we built out value sideways, okay. This is where the inventory came in. This is on a yearly time frame back in 2019. This inventory was built out in 2019, okay. So uh, just keep that in mind, okay? And so bottom line is what's caused this situation right here, we don't have volume profile support, and we just dropped down like a rock, and we have a similar situation, right here going on right here, right now, okay? So bottom line is this was a prior breakout point, and if you go out here on a longer time frame, you can see this better. See, we had these were prior highs that we broke out of way back in 2019, and now we're back testing that breakout. So we came out into a critical, in my opinion, this might potentially be a critical support for some backfill to take care of some of this, these gap downs here on the bond markets. So we might be into a backfill zone starting as early as tomorrow. We might be starting a backfill process in the bond markets. So I know this is a really a dangerous call to be making, but technically, it does make sense that we will find some support right here. Okay, and I also want to go down here on my down here. Okay, you can see we're just absolute carnage versus the Ichimoku, and then my almost signal indicators down here as well. So my main takeaway here, there is reason to think that we might be finding short-term support here in the bond markets. That's my main takeaway that I want to be going forward. If that's the case, we want to really keep a close eye on our XLF. Okay, our XLF. We did have a horrible day today, and they rallied it right back. Okay, and let's go back here on the 15-minute, I guess here. This is on our daily webs. Okay, so bottom line is we put all the inventory down here at the bottom for the day, and then we short squeezed it into the close. That kind of lands in line with the possible support on the bond markets. So I do want to keep that in the back of everybody's mind here that we might have found uh, a crowded trade short the bond markets might be it's gotten too crowded, and we might start seeing a short squeeze in the bond markets here in the near term. That's the Federal Reserve bond markets. Now, let's go into the credit markets for businesses, corporate businesses and stuff. 1 second. Okay, a similar situation I've got going on here, in my opinion. So, uh, today for the past few days here, we've been hovering right here on my target for the LQD. These are corporate bond markets, and unfortunately, this is the wild card right here. Right, going forward here, Uncle Sam's been buying up all this high grade corporate debt, and now they're unwinding that policy. So, in my opinion, the bearish side has been more exaggerated to the downside on the LQD. So these are some of the high grade corporate bonds to the downside. But this is the area that I would be looking for a relief rally, which we haven't quite got that yet. So I do want to keep this on the back burner here. We're on my midline line right there. This is the area that I would be looking to shop for like I said, a relief rally. I'm not saying we're going to go bullish on bonds. I'm just saying, this area does make sense, and I do want to float that. And so on the way up, see last time on the breakout, you see these are your yearly webs, and we didn't have very good volume profile on the way up. So you can make the case for going to go back up to this range highs area here in the there is the potential for that. So I do want to float that idea for you get your traders. So so far in the overnight or yesterday or today, the junk bond markets did not get a really good close here. So this is the bearish case, the junk bonds and the corporate bond markets. We are not into a support area. We're actually in a this is a bear flag continuation set up here for the junk bond markets. So I do want to keep that in the back of your mind for my analysis. Not everything's lining up for my scenario going forward here. But bottom line is the markets are not going to rally until we see a repair in the bond markets. And so we really got to start seeing some sort of repair, and HYG is the last one I wanted to talk about here. And it's a similar situation. These almost are mere patterns. I'm not getting the same type of bullish reversal setups here in these credit markets. So, but I do want to point out there is an area here that we might see a short-term reprieve here in the bond markets. I don't know. I mean, tomorrow maybe the bond markets completely implode. You never know. But I do want to float that idea that we might have come into an area that they may want to try to support it going into next week. Okay, some other takeaways I want here. We do have a slight bullish count on the 1 hour charts so far. I mean, we still got a long ways to go, but we still have a gap above us here on SPY. And if my bond thesis may have found some short-term support, pretty good odds we might be filling that gap here, at least on SPY tomorrow. Qs haven't even attempted to start filling any of the gap that we've had, all week long. So we're up here at the top of the range, but we have not even attempted to try to fill any of this week's gap. And just remember, the midline of the down channel is right above us. It would be fairly easy to tag the midline of the channel tomorrow. Typically that's what we do. Okay. We typically, for a continuation, you actually hit that midline, and that starts maybe another leg lower, but you typically do hit that 50% on the channel, before you actually revert back lower in the markets. So just remember that going forward. Now, no guarantees. IWM way, way, way below the gap that we had early on this week. So, that's why I'm suggesting here the bonds might be finding short-term support. The only problem I got is the credit markets. We got to see what's going on with the high yield bonds tomorrow. and see if we start seeing some relief in that area of the markets. So I'm going to be trading bearish or bullish. I don't know which tomorrow, but I do want to the government bonds look like we might have found an area that could bounce here and do some backfill on like a TLT, like I mentioned earlier. Okay, and then IW diamonds to finish it off here, guys. Diamonds, we have filled all the gaps already this week, so we are seeing relative strength on our diamonds. So keep that in mind here going forward. Here, the diamonds. We are still, outside. We back tested the breakdown. We back tested it, wicking out here. So, definitely we can continue lower, and, I typically for swing trades, your 4-hour charts are the ones that tell you which side of the trade to be on. We're still getting a bearish count on the 4-hour charts. Okay. So, it wasn't a swing long to be going into tomorrow, in my opinion, to, be swinging long positions. These are still very valid bearish, sell the pops, short the rips scenario going into the overnight session. So if we can open flat or even somewhat flat tomorrow, I would think odds favor that we're going to go up a little bit higher into tomorrow's session. So we will see what happens going to tomorrow. Lots of damage. Like all these charts are still, like I said, a bearish count. Most of us agree that we were possibly in a dead cat bounce in the markets, and we're just getting massive volatility here, and it can really confuse investors. So really watch your high yield bonds early in the morning. See if we're gonna start seeing some sort of pre-market volumes. See if they're going to show up in your pre-market alerts on the high yields in some regard here, maybe indicating that some investors are willing to buy the dips at this point tomorrow morning. So that's pretty much my main takeaway. I'm just going to be really watchful on the bonds tomorrow, thinking that if they are going to try to save these levels, that the bond markets really have tomorrow. Tomorrow is the day that they cannot be taking lower prices here. So definitely keep that on watch. Even your industrials, we have filled the gap for the week on the industrials, so that is a good sign. And that's despite having horrible data out of China last week, and we still have a massive gap down from that China data last week. We still haven't even repaired that yet here on that. But see, like I said, every one of these things, you're still in a bearish count on your SARs. So you keep that in mind going forward here. Very dangerous to take swing long in this market. So in my opinion, so heads up. Please, like I said, like the video, and leave comments and all that stuff. Okay, thanks a lot. I appreciate everybody watching.